5 top dividend stocks with a yield greater than 5%. Investors love dividends because they're guaranteed additional return on investment. And in 2022, a year in which the market is historically volatile, dividends have been taken more seriously. Dividends help keep your profits from declining in imperfect markets, provide a passive income, and allow you to purchase more company shares through reinvestment. If you're looking for stocks that offer a healthy income, these are the 5 you should consider. All of them have an annual dividend yield of above 5%. Magellan Midstream, ticker MMP, Petroleo Brasileiro SA Petrobras, ticker PBR, Sunoco LP, ticker SUN, the Williams Companies, ticker WMB, and AT&T, ticker T. Here is a chart illustrating the year-to-date performance of all 4 stocks, with the S&P 500 blended in as a benchmark. I want to talk first about Magellan Midstream, ticker MMP. Magellan Midstream Partners LP engages in the transportation, storage, and distribution of petroleum products. Looking at the daily chart, we see we are up over 19% year-to-date. Zacks Research ranks it a 2 buy with an overall VGM grade of B. Looking at tip ranks, they give it an overall score of 10, which is an outperform. Based on 9 Wall Street analysts offering 12-month price targets for Magellan Midstream in the last 3 months, the average price target is $57.33, with a high forecast of $64 and a low forecast of $53. The average price target represents an 11.1% change from the last price of $51.60. Magellan's market cap is currently $10.57 billion. The company's earnings per share trailing 12 months is $5.17. Its PE ratio is 9.97, and it has a dividend yield of 7.87%. They are scheduled to report earnings on January 31, 2023, and the estimated EPS forecast is $1.30. Last quarter, Q3 2022, Magellan's total revenue was $876.1 million, an increase of over 37% from the previous quarter. In Q3, Magellan Midstream's net income was $330 million. Magellan's total assets for Q3 2022 were $7.81 billion, an increase of 0.28% from the previous quarter. Their total liabilities were $6.06 billion for the fiscal quarter, a 0.5% decrease from the last quarter. Magellan's free cash flow for Q3 2022 was $348 million. For the 2022 fiscal year, their free cash flow decreased by $364.2 million, and their operating cash flow was $391.5 million. Magellan's dividend yield is 7.87%, with a payout ratio of 80.27%. Plugging this number into the dividend calculator, buying 100 shares with no additional contribution, and reinvesting the dividends in the DRIP strategy, we can see that holding for 10 years, we have an ending balance of over $11,000, a total return of 118% and an annual dividend income of $843.97, off a $5,160 investment. Magellan's blogger sentiment is based on 18 blogger opinions. The blogger sentiment is more bullish than other stocks in the industrial goods sector. Number 2 on the list is Petroleo Brasileiro, ticker PBR. Founded in 1953, Petroleo Brasileiro is a Brazil-based company that produces and sells oil and gas. Looking at the daily chart, we see we are up over 60% year-to-date. Zacks Research ranks it a 3 hold with an overall VGM grade of A. Looking at tip ranks, they give it an overall score of 7, which is neutral. Based on 5 Wall Street analysts offering 12-month price targets for Petroleo Brasileiro in the last 3 months, the average price target is $15.16, with a high forecast of $19 and a low forecast of $12.30. The average price target represents a 19.84% change from the last price of $12.65. Petroleo Brasileiro's market cap is currently $78.2 billion. The company's earnings per share trailing 12 months is $4.77. Its PE ratio is 2.65, and it has a dividend yield of 47.27%. Petroleo Brasileiro is scheduled to report earnings on February 21, 2023, and the estimated EPS forecast is $1.04. Last quarter, Q2 2022, Petroleo Brasileiro's total revenue was $34.7 billion, an increase of 65.39% from the same quarter the previous year. In Q2, their net income was $11 billion. Their total assets for Q2 2022 were $191.82 billion, a decrease of -9% from the previous quarter. Their total liabilities were $113 billion for the fiscal quarter, a -4.67% decrease from the previous quarter. Their free cash flow for Q2 2022 was $12.8 billion. For the 2022 fiscal year, their free cash flow decreased by $8.45 billion, and operating cash flow was $14.5 billion. Their dividend yield is a massive 47.27%, with a payout ratio of 115.65%. The bigger question is, does Brasileiro have sufficient earnings to cover its dividend? Their last year's earnings per share were $4.78, and their annual dividend per share is $6.04. The short answer is that it has sufficient payments to cover its dividend, but it is not sustainable. The table shows the dividend history, including the amount per share, payout frequency, declaration, record, and payment dates. I added this stock to the list to show that not all high-yield dividends are created equally. You have to dig a little deeper to see what is going on and that this dividend is too good to be true. Hedge funds decreased holdings by 10.7 million shares last quarter. With this said, I agree with Zacks Research, and tip ranks that this is a hold until we see what happens throughout 2023. I am moving on to number 3, Sunoco LP, ticker SUN. Sunoco LP engages in the management and distribution of fuel products. Looking at the daily chart, we see we are up over 12% year to date. Zacks Research ranks it a 2 buy with an overall VGM grade of A. Looking at tip ranks, they give it an overall score of 9, which is an outperform. Based on 3 Wall Street analysts offering 12-month price targets for Sunoco in the last 3 months, the average price target is $46.67, with a high forecast of $50 and a low forecast of $40. The average price target represents an 8.64% change from the last price of $42.96. Sunoco's market cap is currently $7.2 billion. The company's earnings per share trailing 12 months is $5.21. Its PE ratio is 8.24, and it has a dividend yield of 7.76%. Sunoco is scheduled to report earnings on February 14, 2023, and the estimated EPS forecast is 73 cents. Last quarter, Q2 2022, Sunoco's total revenue was $7.82 billion, an increase of 77.94% from the same quarter the previous year. In Q2, Sunoco's net income was $102 million. Sunoco's total assets for Q2 2022 were $6.92 billion, an increase of 4.81% from the previous quarter. Their total liabilities were $5.94 billion for the fiscal quarter, a 4.98% decrease from the previous quarter. Their free cash flow for Q2 2022 was $285 million. For the 2022 fiscal year, their free cash flow was decreased by a negative $9 million, and operating cash flow was $314 million. Sunoco's dividend yield is 7.76%, with a payout ratio of 58.83%. Plugging this number into the dividend calculator, buying 100 shares with no additional contribution, and reinvesting the dividends in the DRIP strategy, we can see that holding for 10 years, we have an ending balance of over $9,000, a total return of 115%, and annual dividend income of $685.11, off a $4,296 investment. Their blogger sentiment is based on 11 blogger opinions. The blogger sentiment is more bullish than other stocks in the industrial goods sector. Number 4, the Williams Companies, ticker WMB. Williams Companies Incorporated is an energy infrastructure company that primarily operates in the United States. Looking at the daily chart, we see we are up over 12% year to date. Zacks Research ranks it a 2 buy with an overall VGM grade of C. Looking at tip ranks, they give it an overall score of 8, which is an outperform. Based on 8 Wall Street analysts offering 12-month price targets for Williams Company in the last 3 months, the average price target is $37.43, with a high forecast of $41 and a low forecast of $30. The average price target represents an 11.6% change from the last price of $33.54. Williams Company's market cap is currently $40.86 billion. The company's earnings per share trailing 12 months is $1.63. Its PE ratio is 20.47, and it has a dividend yield of 5.08%. Williams Company is scheduled to report earnings on February 14, 2023, and the estimated EPS forecast is 49 cents. Last quarter, Q3 2022, Williams Company's total revenue was $3.02 billion, an increase of 22% from the previous quarter. In Q3, Williams Company's net income was $599 million. Williams Company's total assets for Q3 2022 were $48.67 billion, an increase of 2.35% from the previous quarter. Their total liabilities were $34.76 billion for the fiscal quarter, a 3.09% decrease from the last quarter. Their free cash flow for Q3 2022 was $641 million. For the 2022 fiscal year, their free cash flow decreased by $477 million, and operating cash flow was $1.49 billion. Williams's dividend yield is 5.08%, with a payout ratio of 100.24%. They had a great year, but do they have sufficient earnings to cover its dividend? The short answer is yes. They have the cash to cover their current dividend. Their last year's earnings per share were $1.64, and their annual dividend per share is $1.70. This is why the payout ratio is over 100%. With this said, maintaining this dividend payout is not sustainable. The table shows Williams's dividend history, including the amount per share, payout frequency, declaration, record, and payment dates. If they can continue the current payout amount, let's plug this number into the dividend calculator, buying 100 shares with no additional contribution, and reinvesting the dividends in the DRIP strategy. We can see that holding for 10 years, we have an ending balance of over $5,500, a total return of 65%, and annual dividend income of $273.69, off of a $3,354 investment. Hedge funds decreased holdings by 12.2 million shares last quarter. But, the blogger sentiment is more bullish than other stocks in the industrial goods sector. Number 5, AT&T, ticker T. AT&T Incorporated is the second largest wireless service provider in North America and one of the world's leading communications service carriers. Looking at the daily chart, we see we are just about even year to date. Zacks Research ranks it a 2 buy with an overall VGM grade of B. Looking at tip ranks, they give it an overall score of 8, which is an outperform. Based on 14 Wall Street analysts offering 12-month price targets for AT&T in the last 3 months, the average price target is $19.91, with a high forecast of $24 and a low forecast of $17. The average price target represents an 8.68% change from the last price of $18.32. AT&T's market cap is currently $130.5 billion. The company's earnings per share trailing 12 months is $2.69. Its PE ratio is 6.79, and it has a dividend yield of 7.38%. AT&T is scheduled to report earnings on January 24, 2023, and the estimated EPS forecast is 57 cents. Last quarter, Q3 2022, AT&T's total revenue was $30 billion, a decrease of negative 24.75% from the same quarter the previous year. In Q3, AT&T's net income was $5.98 billion. AT&T's total assets for Q3 2022 were $426.46 billion, a decrease of 0.01% from the previous quarter. Their total liabilities were $286.49 billion for the fiscal quarter, a minus 1.59% decrease from the last quarter. Their free cash flow for Q3 2022 was $4.15 billion. For the 2022 fiscal year, their free cash flow was decreased by negative $2 billion, and operating cash flow was $10.07 billion. AT&T's yield is 7.38%, with a payout ratio of 50.2%, which is sustainable. Plugging this number into the dividend calculator, buying 100 shares with no additional contribution, and reinvesting the dividends in the DRIP strategy, we can see that holding for 10 years, we have an ending balance of $3,800, a total return of 107%, and annual dividend income of $268.54, off of a $1,832 investment. Hedge funds decreased holdings by 674.9 thousand shares last quarter. I am looking at the blogger sentiment based on 79 blogger opinions. The blogger sentiment is more bullish than other stocks in the technology sector. Bottom line, one of the most popular income-generating strategies is to pool your income-producing assets into one or more portfolios. Investors are buying dividend-paying stock, which is expected to make losses more manageable. All these stocks have a dividend yield of over 5%. Some are riskier than others. Tell me in the comments which ones you think are worth the investment. Thank you for making it to the end of my video. If you enjoyed the video, please smash the like button and subscribe.